Hello again, everybody. It's Harry Boxer, the Technical Trader at TechTrader.com. It's Saturday, October the 7th. This is the weekend webinar. Well, a serious rally occurred on Friday and coming right at the right time. Take a look at the long-term pattern on the S&P 500 going back a year. In a year, we went from a low of 34.91, less than a year, in 10 months, 9 months, 34.91 to 46.07, about 1,100 points. Pretty near a 30% rally. And if you take a look at the pullback, it looks like a 1, 2, 3, doesn't it? And right to the trend line that I've redrawn here on a parallel basis. If I reread this and I look at it again, I'm thinking 1, 2, 3, 4, 5. That's wave 1. This is 2. This is a 1, 2, 3, 4, 5. Wave 3 with a 3-wave corrected wave 4. At least that could be the case. I'm going to tell you how serious this is. If we break down below 42.1620 zone, 42.1620, we probably plunge to 4,000 and maybe 3,800. That's what I think. If we should take out upper resistance, and right now the immediate resistance is 43.33. Then we have 43.80 and 44.20. And then you have declining tops line. This zone is very important. You take that out, you're looking at 45.40, 4,600, and then maybe 4,800. Which is a long-term target of my esteemed colleague and friend Ivy Gilbert of LAWaveTrader.net and some others. But there's the S&P, and it's set up to go. We shall see if there's a follow-through. Monday, Tuesday, very important. Read my technical market briefs that I posted on the site. Nasdaq 100, another triple bottom base. There's a 1, 2, 3, 4, and a 5-wave move, maybe. The way I've counted it, after looking at it again, this could be the base breakout, and we have a 1, 2, a long 3, and this is wave 4. If we get a rally, we've got to take out 15.9, which could lead to 16.9 and even 17.9. He's going to be in the next week or so for the Index to not break 14,430. Rally on Friday was 1.7% for the NDX, 1.1% for the S&P and the IWM, a little less than that transportation. You'll see that in a moment. Here's the tranny. Transportation index still in a downtrend and a long one over the last 3 months. It's taken it from 16.7 to Wednesday's low of 14.565, so 2,200 points, very substantial 15% drop. In the Dow 20, right to the trend line. Take a look, right to it. The fact that it bounced off there is important. And now you have to keep in mind that anything under 14.565, it could lead to a much deeper retrace. So this has transportation in order to confirm the S&P and NDX has got to go up over 15,120. In the IWM, the small cap tracking ETF, it's about the worst one of all, but you can see multiple bottoms going way back to this pullback low in October of last year in this range, one little lower low. But other than that, pretty much around 169. And the key resistance, well, we've got to come up through 177, but I think 179 above that is very important for the index. So lots of things to keep an eye on. Now let's look at the technicals. I noted in my weekly technical market briefs, which will be starting every Sunday, every weekend. The McClellan oscillator, which just Wednesday got down to minus 157, and a week before that was minus 161. Double bottomed in this area and then spiked on Friday from minus 115 and minus 19 and finished minus 54. So coming off of an oversold, not deeply. When I say deeply oversold, there's been deeper readings. We may not be out of the woods, but we've seen many lows in this area as well. So I'm thinking we come up to plus 100, 150 before we have to pull back. And it could be a quick thrust too, like it was there or there or there. And usually when they thrust, they really go. I mean, just in August alone, we went from minus 237 to plus 121. The percentage of stocks above the 40, which Usually when it gets down in the high single digits, low teens, you're going to see a rally. We'll take a look. On Wednesday, 1262. It closed nearly 21. So coming off this is a series of lows in here with McClellan also down in that same kind of a zone. Yes, not extreme, but enough to get a strong rally. We got it here in March when we tagged 1279. Wednesday's low, 1262, right in that area. And the VIX finally spiked a bit, not a lot, but it did go from a low in September of 1268 to nearly 21 in a week and a half. It hasn't been over 21 since March of this year, so maybe enough to cause a decent snapback rally, but we need some follow through next week and we need it quickly. Even if there's an early dip on Monday, if they come on and close strong, that'd be great. The worst scenario would be a little pop and then a sharp drop and it goes down a week. Wouldn't shock me if that was the case, but right now I'm leaning towards a breakout and an extension. Friday was a good day, very good day. It was a relentless type of day. Here's the S&P. I want to show it to you. 1 minute chart. You'll see that it took a dip and then the rally started here and just kept going. Coiled, popped, another little one and popped, consolidated. Only some late afternoon front profit taking brought it down. Pulled back from 43.23 to 43.08. They're about 15 points and still was up 50. So a nice day. Let's go to some of the components. Apple. Well, in looking at the overall trend, you'll see that Apple made a lower low here, below these lows in here, for basically 1 day and reversed, and then came back up again. Now, Apple's got work to do. Key resistance, 180. 180, 82 zone. You got to get above that for this thing to really get going again. If it fails in here and rolls over, it's a 1, 2, 3, 4, and you may get a fifth wave. So that's why I'm still cautious in here, but optimistic. Amazon, from the June lows, Amazon double bottom in here, or it appears it might have. Key, 123.5, 3/4 is support. The gap resistance, 132.25, followed by the moving average of 134.5. Those are levels to watch next week for Amazon. Google looks better than both, and is in fact near a multi-year high, reached just under 140 on May 9th. September 18th. So we're back up in that area and had a big day on Friday, rallied a couple of percent, but a nice recovery and broke out of that pattern. It could have been a bear flag. The key now, watching going forward for Google, would be support about 127. Targets going forward, 145 and 150. Microsoft looked like it might be topping. It came down and made a nominal new low here, but it crossed that zone held. Pop pulled back, and then Friday was a big day for Microsoft, jumping 15 points from 314 to 329 and almost 16 points, and closing at the upper end of the range and at the declining top sign above the 50. Let's see if there's a follow through. The key resistance is 342 and 52. NVIDIA. Well, a fairly normal retracement, I would think, here. And a nice pop, but it closed above and had been resistant all week to get above the 50, but it did it on Friday, up 827. The key resistance now, 486. Sorry, 466 and 482. Still in a large rising channel uptrend for NVIDIA. May not be done yet. Netflix has been a bit of a trailer. Some pretty, I would say negative fundamental news of late. It looks like a head and shoulders and still does. It's come down and has not gotten back above the neckline. So this doesn't break out until it gets over 395. And then 410 and 428.30 is your resistance on Netflix. Doesn't look as good as the rest. On the other hand, Meta looks great. Meta popped 17 points on Friday, broke out above the whole trading range, comfortably above the moving averages, and now headed for the all-time high. 326. Possibly. That was the July. I stand corrected. Not the all-time high, but the 2-year high. And beyond that, we're looking at 355. Tesla, not as good as the rest, but you can see that move back above 3 moving averages. What it's got to do next week is take out 264 and then 277.8. You do that, you got a shot at the 298, 300 range again. Still, the long-term pattern is a 1, 2, 3, 4, and this looks like a 1, 2 with 3 starting. You may get 3, 4, and 5 at some point back up in the 375 area. Key is going to be, can it hold the pullback low at 234 is your stop, in my opinion. So that's the Nasdaq 100 generals for the most part. Let's go and look at some ETFs. The SMH, which is one of the key indices we track. It's the tracking stock for the semiconductor group. I've changed the angle a little bit. No doubt we had a breakdown, but we snapped right back. Now this is going to have to take that out over 154.5, 154, let's call it, to really make a difference. But I think even more than that, 157.5. So those are 2 numbers to keep in mind on the SMH. If we see those broken, we have a major rally on our hands, which could lead to a